Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. How are you doing?
I'm doing well, man. Thanks again. I just want to call out. You're on the road doing deals, doing work. You still carve out this hour for the channel, so I appreciate you. Thank you, thank you, thank you. I actually
Yeah,
want to
man.
talk. I want to talk about a text you sent me last week. You actually found an article about Blackstone pulling out, stop buying single family homes. I think it was across 42 different markets. Maybe it was 38 different markets. I remember Boise, Fresno, and Memphis being called out specifically. You shared the article because obviously Fresno is a market that I care a lot about. And I just wanted to ask you what it means, right? Blackstone bought a company that was doing kind of rent to own single family homes, and they stopped buying. So, Greg, I guess that means a housing crash is right around the corner, right? Because if Blackstone's not buying, they have to be smarter than everybody else. So a housing crash has to be coming, right?
Yeah, I don't think so. It's gonna take some time. I mean, we're seeing the market, it's rolling over,
Mhm.
and we're seeing, price reductions, we're seeing inventory stack up. Every market's different, but those are some of the target markets that they were very confident and very active in. So two things have changed. Cost of capital, number one, flow of liquidity, number two, and actually three things. And then the value. So, they're just taking, they didn't say we're stopping completely. They just said we're pulling the brakes right now.
Mhm.
So they're waiting for prices to reset. They're waiting for an understanding of cost of capital and flow of liquidity, meaning, how much money can they get, and what are their investors interested in? Because with the housing market in correction right now, investors aren't so interested in investing in their funds. So,
Mhm.
the other thing is that this hasn't hit yet, but it's starting to, is rents. The way rents have increased over the last couple of years and the way they're continuing to be pushed, there's a lot of stuff on the radar with rent controls and limits and things like that. So I think they're kind of looking at that because that's a company that would get targeted because they're a public company, and if they're outsizing what they charge people for what they could be or should be, perceivably by the government and regulators, that could be a problem. So there's things in the works there that we're not knowing about why they really pulled the plug. But at the end of the day, right now, it's values. They don't want to overpay. They're concerned about rents at this
Mhm.
level because you can only push them so high,
Mhm.
and then the cost of their capital and the amount of it available to them. So that's what's going on.
Yeah, again, I see a lot of YouTubers kind of jumping on this. Blackstone's pulling out, housing crash has to happen. I think there's a couple of things, again, having read the article and been in the market a long time. First and foremost, Blackstone stopped buying, they didn't start selling. So there's a lot of people calling for, hey, what happens when Wall Street dumps their housing and blah, blah, blah. They're not selling. They've just stopped buying because the math changed. It's funny that they called out Fresno because 2 or 3 days before, California Association of Realtors put out the affordability index for Fresno, which obviously I look at. It's done once a quarter, and Fresno is very, very close to a danger level, right? I think it's 31 for me. Danger is 25. It was 48 forever, right? So it's getting really, really close to being unaffordable and like stop buying, start selling. And then Blackstone comes out 2 days later and says we're stopping buying again. Blackstone is a professional real estate organization. One would argue they're the best real estate investors on the planet. I think his name's Gray, Andy Gray, I think his name is, or Andrew Gray. Anyways, they're going to put their capital somewhere else. They didn't say they were selling, and they didn't stop buying everywhere. Does anybody on the planet not think Boise's in trouble? Of course they're going to stop buying in Boise. Does anybody think that Fresno at a 31 is unaffordable? It is. It's math. I built most of our portfolio 1031ing out of houses into apartments the last time Fresno was at 30. So they're being smart allocators. And again, they're in 80 markets. They stopped buying in 40. They're still buying in the other 40. So again, these people looking at Blackstone like they're the red herring or the canary in the coal mine. It's time to get out, time to get out. A, they're not selling, and B, they didn't stop everywhere. So the math just
Well, and
changed.
they don't understand the business model either. Their business model is not cash flow. Their
Yeah.
business model is appreciation. So they're putting long-term capital to work because generally they're going to originate mortgages or whatever, and they're going, well, let's just own the asset instead of the mortgage.
Mm-hmm.
And now you're getting that long-term appreciation. That's really what a fund like that is after. Sure, they get a little bit of cash flow along the way, whatever, but to your point, it's all about appreciation. It's all about values. They're not Open Door. They're not Zillow. Those guys are selling
No.
because they were
Yes.
buyers and they were overpaying. They're selling. companies like BlackRock, even though they overpaid over the last couple of years and prices are going to correct, they'll absorb that in their portfolio. Then they'll start
Yeah.
buying when the market resets, and they'll average it out. So, it's just a different business model. And, a lot of people on YouTube, two things. One, most of them, the analysts you see in, stocks, crypto, investors, whatever, they weren't even here in 2008 and
Yeah.
9. They don't know
Yeah.
what a
They
real
don't. Yeah.
bear market economic downturn looks like. Most of them weren't around in 2017, 2018, when the Fed tried to correct things.
Mm-hmm.
And then when it comes to the real estate side, they're not looking at what is the business model of a company like BlackRock. What are they even doing? So they don't even understand,
Yeah.
what they're doing and what their analysis looks like,
Yeah.
for the long haul. So it's a very different animal than like a Open Door or Zillow or
Yeah.
one of those.
Yeah, it's funny you talk about Open Door. I did a live stream this morning basically saying time to go hunt on Open Door. I've had two students in the last 2 days get properties from Open Door for 20% less than asking. Both of them were over 100 days on market. Both of them were for less than Open Door bought the property for. So Open Door is ripe. They're trying to unload property before the end of Q3, which for them is the end of September. So go get it. Go hunting, right? And again, Blackstone in much of private equity is not iBuyers. iBuyers buy singles, sell singles. Blackstone and private equity build portfolios. And if they decide, like, for example, Blackstone is in Boise, Memphis, and Fresno. We know that because they stopped buying. If they wanted to exit Boise, Fresno, or Memphis, they would take all their property in one portfolio and they would shop it and they would sell it all in one bundle. They are not selling onesie twosies. Not happening. What do you think?
Yeah. It's like I said, it's a different business model.
Yeah. Very, very cool. So again, I don't think Blackstone stopping is a sign that the world is ending. I think it's Blackstone saying, hey, these markets are unaffordable. We can use our capital elsewhere. They're also, as you correctly pointed out, their investors are looking for different returns. Their cost of capital structure has changed. So they have to be more conservative. I think it's just good operators being good operators. That's what I took from the article.
And forecasting, a big downturn in housing. So that's part of the analysis. So, they're not forecasting a crash, this, that, and the other, but it's correcting. They see correction, and their analysis and forecasts are telling them it's going to correct deeper, especially, again, we don't know. They have serious connections behind the scenes.
Oh, yeah.
And, they're talking to people that, we don't know, and most of the market doesn't even know. Yeah. So in terms of forecasting where rates going to go, what's that going to do to housing? What's the lending climate going to look like? Credit control, all those different things that affect the housing market. They're the first layer of, hey, you might want to pay attention because a deeper correction is probably on the horizon.
Yeah, very, very cool. Well, again, I appreciate you sending me articles like you do when you find them. I appreciate that. Where can people find you?
Yeah, gregdickerson.com. That's where all of my info is. Go check it out.
Awesome. Thanks, buddy.